Hey guys, I hope you're doing well. We're going to talk a bit about the ECB rate meeting coming up on Thursday. As we're heading into Thursday, we're first going to get the statement, and then we're going to have the press conference that is going to shed a little bit more light to what the ECB might do in the next few months. The way the market is set up right now, they're anticipating the ECB to signal that they're going to cut rates and maybe introduce quantitative easing at their September meeting. The reason for doing so is that the European economy hasn't really been growing as they anticipated. At the same time, inflation is relatively low. So that's why they want to cut interest rates. And by cutting interest rates from the current negative 40 basis points to potentially negative 60, they want to force the European banks to lend out money to the real economy. However, though, they're talking about introducing tiering into the deposit rate, and the idea with that would be so they don't hurt the banks too much. Well, if they're not hurting the banks, the money will probably remain at the ECB instead of being lent out. And so what probably needs to happen is some sort of QE as well to be introduced to really get banks to start lending. And I think it's depending on that, the QE, that could potentially cause the euro dollar to trade lower. Now, if you look at what's happening on the other side of the pond in the US, they are also anticipated to cut interest rates. In fact, on July 31st, the Federal Reserve is anticipated to cut rates with 25 basis points, and the rate markets agree with that at 75% probability. The other 25 is for the bank to cut with 50 basis points. Now, I personally think that 50 basis points is a little bit exaggerated. It's quite clear that 25 basis points is it. But it's also clear to me that they might continue to cut. So it's a bit difficult to say what's going to happen in the markets. And as well, if you look at the charts, they're pretty much telling us the same thing. The euro dollar is trading sideways between 111.05 and 114.46. And I'm treating this like some sort of a rectangle, but I'm very, very cautious of having a very strong view here, unless, of course, maybe the ECB would surprise us on Thursday or maybe in September. At the same time, maybe the Federal Reserve might surprise us by the end of the month on July 31st. And what we're looking for here is for a breakout. So we're trapped within the May low and the March high. And if we take out the March high, the price will go to 1712, which is the difference between the May low and the March high added to the March high. Same time, if we take out the May low, I think we can drop with the equivalent amount, which is about 309 pips, and potentially reach something like 108. Time will tell us what happens next. It's definitely complicated with both central bank cutting interest rates, but we'll see what happens, and let's see if the technicals can guide us and sort of hint to what may happen with the euro versus the USD. Thanks so much for watching, and don't forget to subscribe. Thank you.